talking to you also from your physics background, engineering background, which we just discussed. And how did you now merge or combine the perspective on market breadth, which you just explained, advanced decline, and the divergence with price? You brought in a little bit the cyclic component we not talked about, so maybe you can elaborate a little bit why you are convinced that cycles also play an important role. I mean, you join us here at the conference for some days, so it seems like you are open to that idea. So how would you now bring in cycles into your technical analysis perspective, maybe also from an engineering background, or both of you?
We get back to the premise that we're interested in. We want to know exactly when to buy something and when to sell it, and cycles play a big part in understanding when the possibilities are that we are at you want to buy low and sell high, that's the story. And so, or sell high and then buy low if on the opposite direction. And so that's what we're after. Mm-hmm. And cycles play a part in that because that's what's going on with the economy and what's going on with the stock market prices. And so we're interested in that.
And the lesson from physics has to do with what he mentioned earlier about acceleration. In the stock market, the path of prices tends to be very much like a bouncing ball. So you have very sharp bottoms rising and a rounded top, and then a sharp bottom, a rounded top and a sharp bottom. Other markets do not behave that way. Gold, for example, is the exact opposite. It makes sharp tops and rounded bottoms and sharp tops. And so when you are in a rally in the stock market, you want to pay attention to acceleration, mm-hmm. because when you are close to that top, it's starting to curl over, the acceleration will change. Mm-hmm. And so you get the biggest indication of acceleration and a high reading on the McClellan oscillator early in a rally, when the ball is just starting to bounce up from the floor. When you start to get to the top of the arc, the acceleration numbers start to diminish. You see breadth divergences, you see lower acceleration or even negative acceleration before you start down. So it's the key is that the acceleration measurements tell you what's actually happening, and you fit that with a cycle analysis to tell you when things are supposed to be happening.
So you see a little bit advanced of time, so in terms of the price structure then, so you use...
Or confirmation of what you think is supposed to be happening.
Yeah.